Indian equity markets saw major weakness last week, with the Nifty 50 and sensex plunging around 2.5%. The broad indices were hit harder, with midcap and smallcap indices dropping over 5%. Well, this slump came as global and domestic factors weighed heavily on investor sentiment. A downward revision in India's full-year GDP growth estimates, rising oil prices and persistent selling by foreign institutional investors created headwinds. Additionally, rising U.S. bond yields and a strengthening U.S. dollar index added to the pressure. Looking ahead, corporate earnings will take center stage, with more Indian companies like Reliance Industries, Infosys and Kotak Mahindra Bank set to announce their Q3 financial year 2025 results this week. These earnings will provide major insight into how companies are navigating inflation and demand challenges. On the macroeconomic front, December's inflation data for India and the US will play a key role in shaping investor expectations ahead of the Reserve Bank of India's February policy meeting. Economists expect India's inflation to have eased further, while US data could signal a pause in the Federal Reserve's interest rate cuts. Oil prices, which surged nearly 4.3% last week due to tighter sanctions on Russian crude and stronger Chinese demand, remain a major factor for Indian markets given their inflationary impact. With Union Budget 2025 approaching on February 1st, markets are likely to remain volatile as investors gauge potential reforms and fiscal policies. Overall, a mix of earnings, global cues and macroeconomic data will keep the market on edge in the coming weeks.